morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is January 22nd, 2024. We get a lot of corporate earnings this week. We also get the first look at the fourth quarter 23 U.S. GDP number, and then we get the Fed's preferred inflation gauge with the PCE price index on Friday. So let's take a look at the market this week and jump on in.
Okay, let's go over last week's market recap for January 22nd, 2024. The NASDAQ and the S&P were up for the week, finishing out Thursday and Friday at all-time highs. Number two is consumer sentiment jumps for the week, and is the yield curve normalizing? Well, here's the number one headline for this week. As I said, equities were hitting all-time highs, and it was back in January 3rd, 2022, almost 2 years ago, was the last all-time high in the S&P 500. And on Friday, we broke that 4,800 mark. So we finally are at an all-time high on the S&P 500. The number two headline for the week is consumer sentiment. Last month, we saw the biggest monthly increase since December of 2005. And after spending 29 straight months below 75, which was the longest time that it's been under 75 since they started calculating this data since back in the 1970s. The number three headline for the week is the yield rebound and the inversion. The yield curves are finally normalizing, and the yields on the 10-year notes are now solidly above those of the 5-year note after more than a year of it being inverted. And on Friday, the 10-year yield closed around 4.14, up from the recent low of 3.79. So we're starting to see yields kind of go back up as they feel that they are not necessarily going to be touching interest rates. The Fed's probably going to leave rates unchanged at the next meeting. All right, let's take a look at the short-term chart for the equity market in the form of the S&P 500. As you remember, we've been adding equities since November 7th, and it's been a nice 10% move on the equity market. As you can see, as of last Friday, we broke the 4,800 mark, and so we're at 4,839. Again, 2 years ago is when we saw that last all-time high. So the year-to-date performance is up 1.5 so far year to date. On the bond side, we also went to add mode back in November 7th, and as the yields were dropping, the bond prices were going up. As you can see, they peaked towards the end of the year, and now are starting, bond prices are starting to come down as yields are doing the inverse. Year-to-date performance is negative 1.2, so a 50-50 portfolio is pretty much flat so far for the first 3 weeks of this year. All right, let's go over the top three market movers for this week. On Thursday, we get the U.S. fourth quarter 2023 GDP preliminary number, so we'll get a feel for is this, and right now it's estimated to be at around 2.5%. So it is a positive number heading into 2024. Thursday and Friday, we get a look at new home sales and pending home sales. And with the interest rates coming back down, is that helping the mortgage and the beaten up mortgage industry? And we'll see if that's been kind of turned around. On Friday, we get the Fed's preferred inflation gauge, which is the PCE price index. And so that will be closely watched on Friday. Right, here's a listing of all the corporate earnings this week. Some of the big ones on Tuesday, we get Netflix, Tesla. On Wednesday, IBM, ServiceNow. Thursday, we get Intel and Visa. And Friday, we get American Express to close out the week. All right, that's it for this week. Thank you for joining us. Our next update is Monday, January 29th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.